This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Okay, so we're here with Wendy Waters, Vice President of Research, Services, and Strategy at GWL Realty Advisors. How are you doing, Wendy?
I'm doing great. Thanks for having me back.
Yeah, thanks for taking the time today. Can we maybe, for people that haven't heard you on our program before, can we start by you telling us a little bit about yourself?
Yeah, sure. So, start at the top. I'm, the Vice President, Research, Services, and Strategy at GWL Realty Advisors. We manage the real estate assets of pension funds and institutional real estate, including for our parent company, Canada Life. I've been there for coming up 17 years, and before that was at Avison Young, also in a research role. And so I've been doing real estate research for over 20 years now. As the two of you know, but your audience may not know, sort of came into real estate by accident. And I have a PhD in economic history, and found that, once I got the PhD, I was finding it less fun. So I went into the .com sector because that seemed like a lot of fun in 2000. And then in 2001, it was less fun. And everything imploded. And so I ended up answering an ad in the newspaper looking for someone to bring a more of an academic research lens to the real estate sector, which hadn't really been done before. And so they hired me at Avison Young. And from there, I just started looking at how I could bring some of that background, which was for using sometimes imperfect sources and a mix of qualitative and quantitative knowledge to real estate questions.
And so did you then, not being interested in real estate really originally, did you kind of, I would imagine you got really excited about real estate then, or was it a slog?
Well, I got really excited about so many of the questions about how the world works and how cities work are all tied into that. So I did a lot of my doctoral research in Mexico City, and that's kind of where I fell in love with how cities work. I loved it there. Just so many layers of the relationship between where people live and jobs and the historical backdrop of all of that and transportation. Mexico City just has all of these things going for it. And so I just gotten so interested just from watching cities. That was the interesting part, not so much the research I was doing.
Right.
Was making my way around Mexico City every day. And so all these things I started to get interested in there then sort of came together when I got into real estate, because you could sort of see how do cities evolve and how do people move and how do people interact with cities. And real estate at the end of the day with office, industrial, retail, multi-residential rental, which is what we do at Realty Advisors, and a lot of the brokerage houses like Avison Young also have people that specialize in all that. All of those kinds of real estate types are all part of just the urban fabric and how it fits together. And people don't always think about the importance of the industrial space, but if you like that stuff you buy at the store, it spent time in an industrial space. Right. Obviously, now people think maybe with e-commerce they think about it a little bit more because it all has to come from a logistics or a facilitation center. But anyway, so that's where sort of why I think it just suddenly clicked was, wow, these are all these things I was finding interesting along the way of getting my PhD.
Right. Yeah. Like we often say on the podcast, as we've kind of been doing it over the years and digging down, it's like the real estate encompasses almost like we could talk to anyone almost on this show in some capacity, right? Because it's so broad and interesting and multi-layered. I'm just wondering, Wendy, before we move on, bringing an academic lens to real estate data, what did that actually look like? Like, can you unpack that a bit?
Sure. Well, the first piece that I wrote that I think got some attention, it was back in 2003, and Vancouver was a finalist to get the 2010 Winter Olympic Games. So the big question was, what is this going to mean for the real estate sector? Commercial real estate, probably residential, but I was focused more on the commercial side. And so I went and took my comparative research methodologies and went and looked at what had happened in other Olympic cities that were comparable to Vancouver in terms of their office demand and industrial demand and housing demands and so forth, and population shifts and the economy in these other cities, and then translated that to a Vancouver scale. So, what's comparable about Salt Lake City, Turin, Sydney, and Vancouver, what pieces are comparable, and sort of triangulated that into a piece on what the impacts would be on Vancouver, and so better understanding how the Olympics impact a city and its real estate markets, and how much more office space is needed, industrial, what it's like afterwards. There is such thing as an Olympic hangover.
Yeah, I had a few of those.
Yeah, this is the real estate experiences it too in the Olympic cities.
And so, was it accurate? The piece that you did on the Olympics?
Yeah, we went and took a look back at it with at the time with Andrew Petrosi, who at the time had my job at Avis & Young. He's now over at Altus, but we went and looked at it because using the same sort of the Avis & Young data, because every real estate brokerage has slightly different data. So we looked at it. Yeah, it did come in fairly accurate. Obviously, we had the economic crisis of 2009,
right,
which was not foreseen in 2003. But in terms of the overall demand, and then the letdown in 2011, 2012, as sort of things shifted, the temporary office needs and employment shifted. Yeah, it was actually pretty close. I don't have the stats in front of me to be able to quote it, but it was. I was actually pleasantly surprised. We released a report at the end of February 2020, but it sort of got it didn't get a lot of attention because of something else that happened in the beginning of March 2020. But
right.
With Avis & Young and Realty Advisors, we kind of did an update to that piece. From back in 2003. It's sort of the 10-year anniversary of the Olympic Games is what we were going for as the release.
Right. And are you doing so? I just want to think about the comparative angle. We often think about what other cities kind of resemble Vancouver and our market. Are there cities that you look to that come up more often than not that you're kind of referencing?
Well, for the Olympics, I had to go with cities that had hosted an Olympics in recent memory. So that, Sydney was, although it was a Summer Olympics, at least it still has some of those characteristics of some geographic constraints naturally, an international city. In some ways, Sydney's more like Toronto than Vancouver, but in other ways, it's like Vancouver. So it's sort of taking pieces of that. Generally, Vancouver's kind of a unique city, so sometimes it's hard to find another city in the world that compares directly because the real estate, is the vacancy. It's just so tight here. There's both land constraints. There's also some policy constraints, but the land constraints have been there all along. For some things, obviously, you look up and down the West Coast for some similarities. Toronto and Vancouver, we compare a lot because there's a lot of similarities, even though they're different sizes. In terms of the structure of the economy, is somewhat similar. Although, Toronto is a little more finance, Vancouver is a little more tech and sort of entertainment tech. But it's quite hard to find ones that work perfectly. So it's taking pieces of cities from around the world sometimes and trying to understand that.
I guess I'm just thinking here but maybe I'll put it this way. If we were in Toronto or Philadelphia or, I don't know, pick another city, is it just that every city's unique, or is it that Vancouver is actually specifically more unique than other cities?
Well, I think for Canada, every city is quite unique. The U.S., I think, has some cities which work in very similar ways, although that might just be my 100,000-foot view of them,
right?
In terms of what their economic structures are and what drives them. But port cities have, their own drivers, which are related to the port, which are just inherent there. The natural resource cities, which Vancouver kind of used to be one, is a little bit less of one now. Have some characteristics in terms of just how their economies work. But it's a good question. I don't have not really giving you a very good answer other than we look at every city, we pick apart at what drives its economy, what drives its office market, what drives its industrial demand. And, every city has similarities and differences.
Right.
Yeah.
And can we talk a little bit about, I guess, GWL and what GWL Realty Advisors does? And then we've talked to you about it before, of course, but for people who, it's been actually a number of years.
Yeah.
We were just talking before we went live, but also your position specifically in research and strategy. What the goals are there.
Sure. So, a little bit more. As I said, we manage institutional real estate. So that's pension funds and institutional clients. We have a couple open-ended funds, which pension funds that are usually smaller pension funds will use. So it's sort of a little bit like a mutual fund for pension funds, but it's an open-ended segregated fund. So we have one's about, I believe, about $6.5 billion, and the other one's around $4 billion in assets under management in Canada. So we have those, and then we also do direct investments for some of our pension fund clients, and that would be, or a half. Sometimes there's a half ownership in an office or a full ownership in office, industrial, retail, multi-residential rental. We do new developments as well, both for the open-ended funds and for for individual clients as the opportunity arises when a site comes to us, and we then look for who's the right client to develop this.
Mm-hmm.
So that's, so there's assets under management, there's new development. A lot of the growth that we look for is new development, although, we do buy income producing properties straight out. For pension funds, why do pension funds have real estate? I mean, we go there. They use real estate as a way to pay their unit holders. So they're retirees. They need a certain amount of cash flow every month to pay out retirees. Most pension funds have about 10 to 15% of their assets in real estate. So the rest might be equities, bonds, infrastructure, other investment vehicles, but 10 to 15% is in real estate. And they like it for the kinds of real estate we're managing. They like it for just that steady income flow. The tenants pay the rents ultimately, what's left after the operating costs of the buildings, then go to pay the retirees. So, we have a variety of, public sector, private sector, union pension funds that are in the open-ended funds. And then we have, specific, I think, government type pension funds as well that we do some direct investment with. And
when I'd love to get back to the cash flow question in a bit, but just thinking about your specific role. So it's data, crunching the numbers, research, but then there's also this kind of strategic component. Can you talk a little bit about what your role is at GWL?
Yeah. So with the research team, the questions that are put in front of us typically revolve around what's the right strategy for these pension funds. And they're long-term investors typically. So things are 10, 15, 25 years. And so we're thinking about not just what's the right asset to have today, but what are the right assets? What's the right mix of assets and different types of assets in different geographies? What is the right mix over 5, 10, 15, 20, 25 years to make sure that you've got a steady flow of income, minimizing the downside volatility? So we don't want to have times when there's no cash flow. That's not good. And obviously it won't happen in a very diversified portfolio. But the idea is to mitigate the risk to that steady cash flow with diversifying across different geographies, asset types. So my team, we look at what's happened in the past. We create models of what the future could look like based on different scenarios in the past, and come up with recommendations of ranges of what cities in Canada, what types of real estate, what offers, different types of real estate offers something slightly different to a pension fund. So, if we do multi-residential rental, for example, it's very low it's a fairly low return. You do not get rich on multi-residential rental, despite what there's people out there might say, but it's a very low volatility. So you can always lease 500 square feet to somebody, especially housing in Canada. It's in demand. And so it's a very reliable asset class in terms of always being able to find a tenant or a resident to live there. It might always not be at the exact rent that you were hoping to achieve, but there's always somebody to come in and pay the rent because we think we do an excellent job managing great communities for people to live in. And so even in a softer market, flight to quality, people will come to us. So we know we can always keep that full. Office and industrial, you might have slightly higher returns, but there's a little more volatility because in a soft market, there might not be a tenant for 100,000 square feet of industrial. There's always that risk there. Office, similarly, sometimes we go into soft office markets and it's just really hard to find anybody that's looking for space or the space that you have. Again, Vancouver's a market that's a bit unique in that there's still enough constraints that it tends to be less volatile in that way, very steady. That's why Vancouver's expensive, is because it's reliable. In terms of demand, demand's a little more reliable. But that's what our team does, is looking at and how you balance. So how much multi-res do you want to have depending on the pension fund's goals and needs versus office versus industrial. The other thing we do is grocery anchored retail. We don't do the big sort of power center, super center type shopping centers, but we do grocery anchored retail as well. So how much of all of that do you need and where, and how does that balance out? Some cities tend to do well when others are doing poorly and vice versa. And so you need to balance all of that out to create a model of what is hopefully a very steadily producing income stream and return stream for the pension fund clients.
And I'm just thinking here in terms of geographies and asset classes. What I guess it's always you always have a bundle of different of a variety, I should say. But what's really attractive right now, or as you said, not necessarily right now, but over the next 5-10 years in your mind?
Well, I think rental housing, and that's been it's been a focus of ours for a long time. We were one of the first pension fund managers doing rental housing. So that is still there. Obviously, we can talk about this quite a bit because we put out a lot of stats on this. There's quite a severe housing shortage both in Vancouver and Toronto. So a lot of need for it, which means that if you can get a site and get it built, there's strong demand for it. So now managing the costs and rent controls are another challenge that all the pension fund managers are having. But so we so over the long term, we like rental housing. We still like office, but office, there's a shift to experiential office. Certainly, it doesn't mean that every single office building is something that we like. So then it's thinking about which office buildings and where.
Right.
But we're still believers that people will be working from offices more than not. And some of the shifts we've seen recently they were already in play before the pandemic. We've just got a magnifying glass on them. Industrials, obviously, it's just been on fire for the last 5+ years in the MTV markets, so Montreal, Toronto, Vancouver, but around North America is just because of the e-commerce growth. It's just required a lot more industrial space, just needed in the whole supply chain, the consumer supply chain. So we like industrial long term. We like multi-res in particular. Office, still believers in office, but it's still it's just. There's some challenges and opportunities in office, and it's balancing the challenges and the opportunities. And we've really liked grocery anchored retail. It's performed really well through the pandemic with people maybe working from home 1 or 2 extra days a week. It's something that's certainly looking at in maybe more suburban markets where there's going to be more demand. Any market that's growing its population, the grocery anchored retail centers. So that's where you might have just your chain grocery store, and there might be a Shoppers there or a pharmacy there as well, and a Starbucks or some equivalent coffee shop. And so those places that people need to go almost every day in a neighborhood, and especially if the population around it's growing, those kinds of sites we really like. It's just a long-term stable opportunity for our clients.
You mentioned that the rental market is undersupplied right now. Can we talk a little bit about that? Can we talk about how is the rental market in the Lower Mainland?
Well, I think if you see in the CMHC stats, I think it was 0.9% vacant for the whole market. I think the Downtown Peninsula was something like 0.6%. When CMHC once a year, they do a survey in October, so we get to take a look at it once a year. So it extremely tight. We have housing models that help us give good numbers to our development team for figuring out performance, figuring out what sites they can make work. So we model the supply-demand imbalance. And we have in Vancouver, I believe, this was now a year ago. I don't think we've done the new calculations completely because we're just still digesting new information, but we were 33,000 units short a year ago.
Wow.
In terms of for purpose-built rental. So that's and so then in the last year, it's gotten worse, we know, because we added a net 3,800 units and we added 78,000 people to the region. 74,000 of those were migrants. We've got 64,000 were over the age of, there's a 64,000 person growth in people over the age of 20, which was migrants and the few people who were aging from age 19 to age 20 in the region. So we have, but it's just how many more adults did we add? Because looking at the theory that most adults don't want to live with 20 other adults. So therefore, if we're not adding housing to meet, 64,000 more grownups, and a typical household, household sizes are shrinking. And especially they're skewing younger to the 25 to 34-year-olds, which are more like about a 1.7, 1.8 people per household. We're to add 3,800 rental units. I think it was only with the estimate of the condo rental, about 6,000, 6,500 units. And then even if you look at just the whole market, you have to sort of take a guess on demolitions for, you can look at completions, but someone tears down a single family house and builds another one. We haven't gotten ourselves any further ahead.
Right.
So I think we came up about 18 to 20,000 was the net completions for 64,000 more adults. So that's ownership, rental, everything. So we're kind of underbuilding by about half.
So I was looking at a graph that you provided that was on a slideshow that I was looking at where it says a crisis 15 years in the making, and it's basically detailing the data you're just unpacking here. But it sounds like not only are we, in this last year, are we like, wow, okay, we're underbuilding in this last year, and inflows of new residents is expanding and the number of houses aren't. We've been doing that for close to 2 decades.
Yeah. So if we just look at rental housing, we look back to 1990 and there was, I believe it was about 110,000 purpose-built rental units in the Lower Mainland or Metro Vancouver. And now there's 118,000. So we've got 30 years, and we've managed to add 8,000 units net.
Wow.
And half of those were in the last year, by the way. So we're doing better in terms of purpose-built rental and getting under construction, but it doesn't make up for decades of not building purpose-built rental.
Right.
And so that starts to get into the costs of it, the affordability question, because the older stock is more affordable, theoretically, but we haven't been building for 20, 30 years much in the way of purpose-built rental. So you can't build brand new and old building.
Right.
So traditionally, the newer product was nicer and newer, and people with a little bit more money rented that. And if you had less money, you rented something a bit older or a basement suite or whatever. And some of it had to do with just how old you were. I lived in a basement suite when I was 20.
Sure.
And then ended up in, an older purpose-built rental before, my now husband and I bought something. But that was a normal path. And that's really not there anymore. It's people are just, living with parents longer, lots of overcrowded households, multiple people in, 4, 6, 8 people in 2-bedroom suites.
Right. And that's just literally a product of this, the numbers that you're talking about kind of compounding year over year.
Exactly. Like the chart, and I think you might put it on your Instagram or on your website or something.
At Vancouver Real Estate Podcast.
Yeah. You can see that every year we add, it's a chart showing the number of net new 25 to 34-year-olds we add to the market. That's a prime rental demographic. That's why we look at that age cohort. Or maybe it's 20 to 34-year-olds.
20 to 34 on here,
Thank you. We've got different charts. So which one did I give you? 20 to 34-year-olds. So prime renter demographic, how many net new people in that age group versus how many new units. And you can see there's nice tall column chart lines for the new people and almost nothing. You need a magnifying glass.
I was going to say, at first I just was looking, going, I'm not understanding the chart because the change in purpose-built rental units.
You thought it was just the line, the baseline.
Yeah, exactly.
Why have we done such a poor job?
Well, obviously we were adding condominium product for a while, and condominium product is some ways it's easier to build from a capital stack or finding the capital perspective. So condo developers can typically historically been able to pay more for a site than a rental developer. And then because they do their pre-sales, they get their loans ahead of time. There's just a lot less risk. You need, a lot less equity up front, or just the lending straight up front. It's, for rental, it's all us or us, on behalf of our clients, where there might be some construction loan, but it's not the same as where you've been able to diversify it across 100 different individual investors
Right.
who've all bought units. So the condo model was creating a lot of housing in this market and, other markets across the country for a long time. Still is. And obviously a lot of those units show up on the rental pool, which is great because we needed the rental stock. And that's partly why we got away with it, was because there was at least something to rent. I think as we know, it's not a stable rental stock. The purpose-built rental, that often investor owners, they keep it for 1 or 2 years. They realize that being a landlord's actually work. And there's
the passive nature of it is not always passive.
It is not a passive investment. And for what, often what you get in returns, in some ways you might as well have a passive investment, like go buy bank stocks. And it's a lot less headaches. And whether, depending on the quality of the unit, how much repairs needed to be done. So those units tend to turn over. They tend to turn over to owner occupiers because people look, as you're real estate agents, people who are looking for a home tend to want to buy something that's already there.
Mm-hmm.
They can see where they're going to put the couch, or they need a home to live in.
Yeah,
now.
I was going to say that's the big challenge, right? It's like, do you want to buy something for 3 years from now? And you're like, well, I need somewhere to go. Why am I paying rent?
Yeah, and so therefore, as soon as a condo becomes available that's already finished, that's when the owner users will tend to outbid the investor because they need a home and there's a value on the home. The investor probably needs at least a 4 or 5% return to do it. So that's why they fall out of the rental stock is sort of the point of that long-winded explanation.
Right.
So it's not stable. Obviously not professional landlords in most cases. Obviously some of the condo product is professionally managed, but as rental, but a lot of it is not. Which creates some other challenges for renters. Being in an individual owner who may or may not live anywhere near here when there's something goes wrong, versus if you're renting from a professional, landlord like us. Dishwasher goes, we can probably repair it the same day. We might have a spare one in the basement. Versus try getting a hold of the landlord who's on his boat in the Caribbean or wherever.
And I was just going to say, because I'm looking at this chart right now, and you were saying that we're doing better. If you think about maybe the reasons why we're doing better, if we can talk about that a bit, but then also what's preventing us from building more purpose-built rental right now? Is it just getting outbid by condo developers, or is there more to the story?
Well, the challenge is still pulling together, what the industry someone might call the capital stack, but figuring out how you're going to make this work. So for pension funds, a lot of them have rules around how long you can't land bank. Like, again, we're trying to pay pensioners their pensions. So we can't have land sitting in, an empty lot for a long period of time. So the length of the approvals process is one of the challenges for the institutional, so the pension fund investors in purpose-built rental for the development process. So that's certainly one of them. It's right now, obviously there's interest rates and so forth, but it's the length of time to get a site going. Also the risks. If it has to go to a rezoning or a public hearing, there's a risk that you're going to get a no from council. So that makes it very hard for some groups, to buy a site not knowing if you can build rental. And we don't do condo. And a lot of the pension fund managers are, counterparts. Either haven't historically, they might be looking at it, because sometimes condo can be a backup plan.
Yeah, you can't pivot, right?
We haven't historically pivoted. That's not been part of our plan or our client's plan to do that. So that's another reason, but one of the reasons, it's just the length of time it takes to get a project going, the risk that you could get a no, or, that you're going to end up in what we can just call a battle to try and get it through, where eventually you'll win. So in Ontario, there's an appeal process if you get turned down at a public hearing at City Council, but the appeal process then adds another year to your timeline. And time is money. So if we put a lot of money, obviously Vancouver's expensive. You buy a site, that's a lot of money, a lot of risk right there. Clock starts ticking on that, on the interest rates of any loan, or just the cost where you could have been putting that money
Sure,
capital
opportunity
somewhere else.
cost,
There's
yeah.
an opportunity cost there, and then it's just how long is it going to take. So that's why you're not seeing as much of the institutional, but even the private families here, they might build condo instead, or they just say they build in another market. And if you start going through some of the big sort of more family-owned companies that operate out of Vancouver, and you look at where they've been building down the West Coast, they've been building in Chicago, they've been building elsewhere in North America. They can get it done faster, less red tape. In most cases, the other thing you have to think about is your long-term cash flow and the rent control situation in BC and Ontario.
And that's what I wanted to touch on. Do you think the Residential Tenancy Act has created a burden for a lot of people to come into this market?
Well, not so much the Residential Tenancy Act itself, but the change. So, up until 2017, I believe it was, we were CPI plus 2 was the rent control guideline. In BC, Ontario was straight CPI, California CPI plus 7. And so, partly why are we doing better right now? A lot of the projects that opened the last year started under CPI plus 2, including ours. We finished 2 this year, or in the past, say, 14 months, we finished 2 new rental buildings. So that was attractive for some of the Canadian capital because it looked better than Toronto, and the Vancouver market back to it being very stable, very reliable. Income's been actually, despite what you might hear, income's been going up here quite strongly. So that's partly why 7 years ago, a lot of projects started, and that's why we're seeing some pretty strong
this is so
right now.
Right. So and again, this is sort of outside of where we operate, but my understanding is that there was a moment in the last, say, 5 years where rental started making sense, partly because of interest rates, but partly there was a bunch of things that kind of came together to make purpose-built rental attractive again. And as I understand it, that's no longer the case. Interest rates alone make it no longer the case. But the interesting thing in my mind is that when we're talking about this 15 years in the making, the crisis of how many renters there are versus houses available. Right now, we're in a moment where purpose-built rental doesn't make sense, but building condos seems to not make sense either. Right. It doesn't make sense to build anything.
That is the challenge that we have in this market, and people keep coming. And so, if we're worried about affordability, and I'm not a policy expert, but somebody with policy expertise to think about what levers can we turn right now to make sure that construction keeps going. The obvious thing would probably be to turn on purpose-built rental, but also the non-market side. Is there a chance to pivot some of the labor cost that's been going up and labor availability, pivot some of that into that side as well, for the nonprofit housing. But I am very worried about the situation right now because, as you say, it's hard to make a condo make sense. It's hard to make a rental make sense with the current interest rates. Hopefully they come down. The one thing about some of the institutions, again, is taking the long-term view. So there's some possibility, there's some attractiveness to going anyway, because if you're taking a 25-year view on things and figuring out how to, manage the extra cost of capital that is right now, that is there right now. But for private builder, private company, can you move forward? That's a challenge, especially if you can't get pre-sales, because now you've got to get people like you and your clients to try to come through with pre-sales, and with interest rates being or mortgage rates being and payments and so forth, being at least double what they were. Do they have the confidence to put a down payment on a unit that they won't see for 3 years? Maybe they will as things stabilize, because you don't actually, of course, complete on the unit for a few years. But I am worried about the housing supply pulling back. The starts really pulling back in this environment.
So it sounds like if you're making a bet right now about whether rents will be going up, down, or staying stable, it sounds like you're saying they're going up.
They're going up. I mean, you look at just the people keep coming. And they're coming for good jobs. And, in the stack I gave you, there's probably some fairly confusing charts about the incomes of immigrants. But, we're looking at the incomes of immigrants, because historically there was this idea of, it's the doctor driving a taxi cab and they don't have money. And so what's been happening to immigrant incomes? And they're up 64% in the last 9 years for, if you look at people 25 to 34 years old coming in as an economic immigrant 1 year after they got their permanent residency status. So 1 year after becoming, we might call a new Canadian, or at least a permanent resident, what's their income? It's up 64%. And so it's up to around $50,000 in 2020 dollars. Was in 2020 is the last year the government's released data on this for. And that's substantial, about $50,000 for one person 1 year after they've arrived. Yeah. You think about all the people that have been here 4, 5, 6 years, how also you put that person into a 2-person household, especially a couple. Income in today's dollars, probably together, it would be $110,000. You can rent brand new product in the high-end neighborhoods in Vancouver with that kind of income. You get a small 1-bedroom, but a couple could do that. So people can't afford the new rental, which is good news. We did this research in part to show that we can be comfortable with the high rents that we need in order to put a shovel in the ground and start building. That, the rents are not going to be what you pay in an older building, in the suburbs, if we're building brand new in prime neighborhoods in Vancouver or North Vancouver.
Is there other interesting stats? Can we just talk about population growth a little bit? Because I know, like, we've talked, I think it was on our Instagram, about basically the 1.5 million people over the next 3 years. But I know presumably you're doing kind of a little bit more fine, detailed analysis of who's coming and the numbers. Can we just talk about that a little bit?
Yeah. So, the 1.5 million to Canada over the next 3 years, that's new permanent residents.
Right.
But there's also a large number of what are called non-permanent residents that are welcomed every year. And I believe just last quarter, there was 200,000 of them to Canada.
Wow. So we're talking like close to 1 million people a year of non-permanent.
That was just Q4, which is some of that was, I think, some pent-up demand from the pandemic and so forth. But I think Benjamin Tall at CIBC was estimating that we might, for 2022, when it all is added up, it might be close to 1 million new people showed up in Canada.
In 2022.
In 2022, our model and my colleague Sarah Obidi on my team has been trying to figure this out. We came out at 938,000.
So pretty close.
With her. Yes. Just looking at, and that's foreign students coming in. So the net gain in international students across Canada. That's obviously people coming in for any kind of temporary employment. That also includes Ukrainians. So people coming in on those temporary permits. And there's a lot of Ukrainians who haven't landed yet that have permits, is my understanding. Like, they haven't managed to get here, but they have the right to come. So that's some of the reasons why we're seeing elevated immigration, or total migration. So permanent residents, non-permanent residents. And when you start thinking the housing market, they all need a place to live. So you can't just model your future housing needs on only the gain in permanent residents. You need to gain in all people who are welcome to be in Canada right now, all need housing. And so that's been one of the crunches. And then sometimes I think some of the government models haven't always incorporated the non-permanent residents, because they used to be a little bit more of just a pass-through. Like, every year a certain number would come and a certain number would leave, and you'd end up with just modest net gains or net losses in non-permanent residents. But international students in particular have been a growing source of both future Canadians as well as revenue for the universities across the country.
Is there a rough percentage that you use of non-permanent residents that become permanent residents? Or is that something that you're considering?
Yeah, so it's in our models. We get that, and we get what's been happening, recently from the Immigration Refugee Citizenship Canada Department. But during the pandemic, it was all the way up about 80% of new Canadians were coming from the non-permanent residents, because they were already here. You couldn't bring in anybody because we had the borders closed. Otherwise, I believe it's between about 20 and 30% of. So when you hear about how many new immigrants there are, new permanent residents, about 20 or 30% were already here, and then the rest are coming for were not here at least immediately before they got that permanent residency status. They might have come here for university, gone back to a home country, but then subsequently been offered a job here because they had a Canadian university degree. Obviously, that makes them very employable in Canada. And then they came back.
And we always hear the number of 35% will settle in the Lower Mainland for Canadian immigrants, and I don't know how accurate that is or not. That gets thrown around, but
I think it's more like 18. Actually.
18%.
Yeah.
Okay, because that was one thing I was noticing.
Most realtors say 50%, I think.
I think I say 75. So we're all over the map here.
Yes,
But
which
18
are accurate? Which numbers are accurate? We don't know.
But yeah, so 18% will settle in the Lower Mainland then.
Historically, that's where they tend
Roughly.
to roughly end up. And I think it's more like 35 to 40% has been in the GTA, the Toronto market, and then about 18. But there's actually a fair amount of volatility year to year. Obviously, depends on jobs, depends on which university is adding more international student counts and so forth. But that's my recollection. If I'm wrong, I will send you guys an email and you can post a correction on the Instagram. Try to remember. There's a lot of stats to remember, which when we're doing this live, mostly without notes.
Yeah, 100%. I have less a numbers question, and I feel like this takes me back to when we were talking a lot about the municipal election and kind of the dire straits situation. But it strikes me as there's two ways I'm just hearing what you're saying. One is that the quote unquote housing crisis we've been in for seemingly forever is just actually getting worse and worse and worse. Like, is there a breaking point? And then and by breaking point, I guess where, the economy, like, it's just not viable to do business in Vancouver. Like, does that actually, is there, because it just seems like, I was listening, David Eby was on the radio this morning and he was like, maybe it was political spin, but a lot of a number of BC's problems are, that we're growing very quickly. Like, it's a product of our success in a lot of ways. But is there a breaking point? Maybe I'll just leave it there as the first question.
Well, I think I am worried about the housing crisis in terms of as a threat to the other real estate that we manage, in terms of this fiduciary responsibility to our pension fund clients and their investments. Yeah, I am worried about not having enough housing means that there will be a pullback in the growth of office-oriented jobs in Vancouver. So, some of the big U.S. tech companies that we're all familiar with that have been adding a lot of jobs in this market, if they start hearing that people can't find housing, even making good six-figure incomes, they can't find housing, will they just look, okay, we got to go we got to find another city, if, whether it's in the U.S. or you can't find people in the U.S., they may move to another city in Canada. I mean, I think Calgary is a great candidate for some of these companies, and I would not be surprised if they do end up going there. Maybe not at the expense of Vancouver, in addition, but it could also be at the expense of Vancouver. So is there a breaking point? I don't know if there's an actual exact point. I think there's just that bending spot where Vancouver becomes less attractive to, bring in people, because even if you're creating jobs here, you probably are also bringing in leadership from somewhere else in the world. And most people are quite happy to come to Vancouver. It's a nice place to live, so we know that. But if you have to then start paying them extra because this is a really expensive market to help get them into homes, or just you can't find them housing at any price, and that's obviously what becomes the challenge. So I think there's a bending point. I think we're probably very close to it now, and I think especially probably the next year has even more newcomers to this market coming in. So it's going to the situation will get worse even if we could turn on the taps for housing. And I think, some of the suburban municipalities in the region have done a really good job of just opening up, intensifying, big regional shopping center sites to adding a lot more housing. They've got, some other brownfield, greenfield sites, which they've been able to use. And they've been going with high density housing and, very, dynamic mixed use communities, walkable communities. So that's been great, but more of the region that's already established, like the city of Vancouver, needs to do more of that and really just find a way to turn on density. But even if we do that, the problem is it still takes 3 years to build a higher density building. Maybe 2 if the supply chain's now not in COVID times.
Right.
But our last 2 buildings, they were 3 years of construction, and so that's the challenge, is even if we could turn it on, we're still in this really tough point right now where more people are coming and it takes years to get a building built, even if you got all your permits today.
Sure.
And assuming you could even find the trades and construction crew to get it done, because that's also we're at a retirement crisis in the trades and construction industry as well.
Right.
Hopefully, some of the new arrivals will be going into the trades.
Well, I think that's something we need.
Yeah,
The government has,
probably not though.
No,
Like,
that across the country, that's certainly something that the real estate and the construction industry has been pushing the government.
I was going to say,
for.
because the point system, right? I haven't looked at it for a long time, but my understanding was they don't. If you're a carpenter, it's not like you don't get as many as if you're a doctor.
Yeah, but even for the non-permanent residents, in the past we've welcomed people to come to work in some of the lower skilled jobs in, say, the healthcare system, which as non-permanent residents, and it's a path to citizenship as well, and caregivers and so forth. I think there is a lobby on the government to say we need to do the same for trades and construction workers and semi-skilled and skilled construction labor. At least invite them in as non-permanent residents with a path to citizenship. And that once you've been here and you've been contributing to Canada, presumably there is a path.
Right.
We should keep you here because we need to keep building.
Yeah.
So,
just thinking back to the maybe not the breaking point, but the bending point. One of the things I think about, and maybe this is a crass, although I mean it's all of our businesses, I guess. So it's maybe not a crass way of looking at it. I worry about the health of the city and potentially the overall economy, but I just think in terms of like, if you're in terms of like strategy, this situation is a great place to own real estate.
yes.
Like is there a way in which this situation seems so brutal that like if anybody's worried about real estate, this is like the warm hug you need, right? Is talking to Wendy Waters. So I'm just thinking, like, is there that bending point? Like, can we play out a negative? I feel like the positives for homeowners or investors in Vancouver are pretty clear, and it's pretty tragic for somebody looking for a rental or just a home, period. But can we play out like what's the worst case scenario here for the bending point? Like, what does that look like? Is it just kind of a mass exodus? Does it become just a resort town like we've been talking about for a decade, or what?
Well, I think for a while it was sort of drifting into resort town, and then we had all the job growth and the office related job growth and the tech growth, and so now that's it's created as if I didn't hear the premier this morning, but if he was saying it's been very the economy here has been very successful.
Right.
I think we were tracking office oriented jobs, and for a number of years Vancouver was growing them at 5 or 6% a year.
Yeah.
That is a lot of employment. And these are good, well-paying jobs, so it's creating a situation where people could afford more real estate,
Right.
And so then, of course, it was meaning that all real estate went up because there was not, that we have a supply crisis, that we weren't adding supply. So the bending point, if you were, is it going to be where it's going to be a bit of a crash on single-family housing? I'm not sure that that's the case. Certainly, I think we saw it go a little soft out in the suburbs as the pandemic ended and people realized they might actually have to go to the office a few days a week,
Right.
and the hour and a half drive might not be so, quite what they wanted. So there's probably a little, in pockets where it got probably a little overheated. Maybe there's some drifting down, but we can't make more single family lots in the Lower Mainland, really. So if you have one of those, and you probably paid, unless you just bought it a year ago, you've probably paid a lot less than what it's worth. So, you're going to be fine. It might not be worth what it was a year ago, but you presumably if you don't have to sell it today, you're fine. So I don't see the single family. I think there's probably an easing of the high-end real estate, and I think we've seen that. We've seen some projects that were trying to get 2,000 a square foot condo not go ahead.
Yeah.
Not get their pre-sales, have to pivot to more of a, I was going to say mid-market product, but I'm not sure if 1,500 a foot's a mid-market product. But having to pivot to a different audience, we could put it that way. So I think some of that, there's, certainly the bending, the luxury market certainly has fallen off in Vancouver for, a variety of reasons that I'm not an expert on, I think. So maybe we won't go there. But for just the regular product, if you have ground oriented, I think you're probably in good shape. And I think any real estate is still going to do okay. It's really right now, it's obviously the interest rates and the mortgage rates and what people can afford to carry. But if we keep bringing in people making good money into this region, I think if you've got something that's coming up for sale, you're probably okay in terms of there will be buyers. I would think, just because of just this wave of people that's almost double what's the normal. What's been the long-term average of people coming into the region. So you're going to find a buyer. But if you're trying to if you're trying to think about a very large master plan community and what kind of pricing you needed, that could be a little trickier in the future. Just if you're assuming the population is going to stay at adding 78,000 a year, and that's the kind of flow you need to make your numbers work, then you're going to be seeing some pain.
Right.
Well, maybe.
Actually, I got one more.
You got one more question.
I got one more.
All right. Well, maybe we'll keep going.
If you got the time, Wendy.
Yeah.
Last question, Wendy. And this is, if you were advising a niece or nephew and they had $2 million, and it doesn't have to be in Vancouver.
Okay.
But investing in real estate, what would you advise them? Two questions. One, what and where? And two, when? Would you buy right now? And what and where would you buy? Or and not you, you're a fictitious niece or nephew
that you have a good relationship
somebody
with.
very important in your
Well,
life.
this is getting a little outside my day job expertise.
Sure.
So that's there's the first challenge that you've put on me. So I'm now just think off the top of my head. I would look to either pick up, if you have $2 million cash.
I would say $2 million budget.
$2 million budget. Okay.
Complicate things.
$2 million cash. I was going to say, buy a single family house where you're in the path of development, like on, Nanaimo, Broadway, that's sort of somewhere,
Sure. Right.
or somewhere in the Broadway corridor. If you have just a $2 million budget, so you've got like a couple $100,000 in cash, and then the rest of it you've got to find ways to make payments on. Good question. I think, I guess I'm maybe a little bit biased to East Vancouver, near, with future of the Broadway line coming through, where you'd be, or connectivity to it to get out to UBC. City of North Van along the Lonsdale corridor. If you could find something, especially that's like, I'm thinking a redevelopment site with rental potential right now. So could you find a townhouse off the Lonsdale corridor somewhere that you hold for a bit and wait for the surrounding group to redevelop it? That might be a good play that I would look for. It's a couple of those, some of those markets where there's a lot of development is going to come in the next 10 plus years, and that maybe you'd be a part of it. Then roll your investment into a bigger project, and then you get something new out of it plus a return.
So it sounds like, and just to kind of summarize, but it sounds very much so like you're forecasting pretty far out for GWL, but also like that's really the value of this city is what's to come in the next 10 to 15 years.
I think so. I think in the city of Vancouver, hopefully we have a council that's going to embrace this opportunity, which is to add a lot more housing, revitalize a lot of neighborhoods that have been slowly fading. Kitsilano would be one of those that, it's sort of got an aging population. There hasn't been new housing there, much in the way of it for ever.
Yeah.
100 years. And revitalize some of these great neighborhoods, which already have, a nice walkable high street, but they've been getting kind of quiet. So I think there's a huge opportunity there, as well as, parts of East Vancouver densifying. So revitalizing these sort of transit and walkable corridors. Here is I've been really impressed with what's been happening along the Lonsdale corridor in North Vancouver. So I think there's over the next 10, 15 years, I think there's huge opportunities. I think obviously some of the suburban areas as well, and some of them I don't know as well as others, with these great walkable mixed use neighborhoods. That have breweries and kids play areas and kids spaces and parks and great recreation. So I think there's a lot of hope for this region, but we really do have to fix the housing supply. And it means housing everywhere. It can't just be Burquitlam that is taking all of the new housing, and amazing Brentwood. And the Brentwood neighborhood is amazing in terms of how much housing they've added there.
Right.
But we can't just be there. It's got to be the older neighborhoods of Vancouver have to embrace change and embrace the fact that it brings in vitality. It brings in a workforce to work coffee shops and to work restaurants. By having a diversity of housing, you get a diversity of people. So I'm optimistic if we can do that, but we absolutely have to say yes to more housing. And I know it's hard for people that have been in their single family home for a long time to welcome the idea that the neighborhood might become mixed density.
Right.
But we need that to happen. It's a great city and great people, and the history of the city has been in, it's always been welcoming people, but it's always been a tight market. So
it sounds like if we build it, they will come, but if we don't build it, they're still coming.
People are coming, and it will end up being, though, that are you going to end up with this hollowing out where how do you get, a lot of people have their daily Starbucks, Tim Hortons, whatever it is. Well, if those people who work there have no place to live anywhere near those, and we're in a labor shortage as well, they're going to work near wherever they can live or go to school or, wherever it is. So they might not live in your neighborhood if you don't embrace some economic diversity and some change. And I think it's that quality of life, that experience that we get used to of being able to go to restaurants 7 days a week. With the labor shortage recently, like you see on commercial drives, some restaurants only open 5 days a week.
Right.
They just say it's a staffing issue. We just can't do it. And are we going to start seeing 4 days a week of restaurants? No morning coffee certain days of the week at your favorite coffee shop because they just say we just can't get staffing. So I think that's something we need to be thinking about, is that we need more housing everywhere, diversity of housing in terms of for mixed incomes, welcoming newcomers. And if we can do that, the next 10, 15 years are really exciting for this region.
Sound advice. Well, Wendy, we have this segment called the 5 lighthearted questions that we end the show. Okay. Can you stick around for that?
Sure.
Okay, so question number 1 is one book that you've read recently that you'd recommend for our listeners.
Well, I don't know if it's for everybody. Weapons of Math Destruction, MATH. I think it's Kathy O'Neill, I believe, is the author. And it's looking at some of the limits of data and limits of using database sort of algorithms for analyzing, whether a school is good, whether you should buy something or not buy something, in terms of that, partial data ends up being the whole story instead of, that it's flawed data, and we need to look at things more holistically. So Weapons of Math Destruction is certainly...
Best title, too.
Yeah, that's great. Is it that the partial data is the problem, or is it that I feel like we went through that and maybe we're still in it, but like the Nate Silvers of the world, Moneyball, and where it's like everything became based on just run a numbers set through and figure out who the best pitcher is for X number of reasons, right?
Exactly. So she's pointing out some limits of that. And then also, people start, say if it's teachers, they start teaching to the data, not teaching to be to the whole person that you're supposed to be looking after. You're just trying to get data. Or teachers getting fired because they're looking after the whole child and not looking after their math score.
Right.
And I think, we'd all agree that we'd rather have mentally healthy children with mediocre math scores than the other way around. So anyway, it's thought provoking on things like the Moneyball situation of just, can we put everything down to numbers, and does that create a better society or better decisions? And so I think it's worthwhile for anyone that spends a lot of time in numbers and stats to take a look at.
Second question for you. In the last few years, what new belief, behavior, or habit has most improved your life?
I'm going to go with yoga. I took it up in March of 2020.
Oh. Hot yoga probably, and perfect.
No. But
like 30 people in a small room.
Definitely not that. No, it's because I'm stuck at home. But, different times I've been told to try meditating, and it never worked for me. I can't sit still. But and also I was told to stretch more for various injuries. You're getting
Right.
older. You still want exercise. I still exercise and do a lot of sports, and being told to stretch more. And it somehow combined the two, where it gave me sort of a mental cleanse at the same time I could be moving. So Vinyasa yoga with the app that's Cassandra Yoga by Cassandra.
Great.
Okay, so you do it at home.
I do it at home. I've never been to a yoga class. I went to a couple on Zoom that that we put out for tenants and clients with the office buildings, but I've never been to a yoga class. But I learned how to do it from an app during the pandemic, and I still do yoga every morning
nice.
outside on one of our back decks. So
Wow. Question number 3: what have you been binge watching lately, or a favorite movie?
we've been watching Star Trek Picard.
That is outside of our wheelhouse, I would say, or at least mine, Adam.
Okay.
I would imagine I would like it, but I haven't seen it.
Yeah. So if you watch the Star Trek Next Generation, now it's the Picard 30, 40 years later.
Oh,
or however old
Is
he
this new?
Yes.
Oh,
It's
wow.
brand new. You can get it on Crave. I think it also shows up on Sci-Fi Channel or something, but you can get it on Crave.
Very cool. Favorite band or music, Wendy?
That one is a tough one. And I knew it was coming because I listened to one of your recent podcasts. But I found out I've not been listening to music very much
really?
lately. But going down to see Billy Joel and Stevie Nicks in LA next week. So we'll go with
Wow.
some vintage stuff.
And that's in LA?
It's an LA outdoor stadium. I can't remember the name of the stadium, but it's in Inglewood, Paramount, something like that.
Wow. Very cool. And
Last but not least, something that you have purchased for under $1,500 that's had a positive impact on your life in the last few years.
Because it was such a surprise that it did, going with the Apple Watch.
Yeah.
I was actually, I feel like it's now just an appendage of mine. But at first I was worried because I was like, man, I'm on my phone too much. Do I really need another screen?
You can turn off the notifications, can't you? I mean, I hope you can. I don't know
about
doing that.
But now I like sleep with mine. I'm
not there.
Speaking of data, like I'm hooked on how much core sleep did I get last night versus REM or whatever. It's like
I've been doing that, but I like the alarm that it just sort of buzzes my wrist.
Oh,
so
yeah,
I'm
me too.
not
Me too.
waking up my husband when I'm getting up at 5:30.
And
When are you charging your watches?
you know what you do? Here's the trick.
tip.
Here's the thing. No, literally, it charges really quick. So you go from say 8 till 9:30. I feel like you're done. In the evening, I just plug it in. By 9:30, it's full.
Yeah. I tend to just put it on when I wake up in the middle of the night, and I just put it on. I charge it as I'm going to bed. But I've also talked to people that do it while they're having some women doing shower and hair and makeup and stuff in the morning. They put it on the charger, and
it's charged.
It only takes about 45 minutes to an hour. So I tried for a little while. I tried when I was doing Zoom meetings, because of course I got this during the pandemic, where I have to sit still in front of a camera. I make sure I take my watch off and put it on a charger because I'm not allowed to move anyway.
Yeah, you're not going to lose any steps.
Yeah, I'm not going to lose anything out of doing that. But I've now found I just put it on as I'm going to bed, and then I always wake up in the night, so I just grab it and put it on when I wake up.
Well, Wendy, how can people find out more about what you're up to, and then of course GWL Realty Advisors?
Well, obviously, you can go to gwlra.com, and there actually is a research tab on there, so you can get to some of the research that we've published. We publish anywhere from about 4 to 8 research notes a year, just depending on how busy we are. And you can find me on LinkedIn, and I've been sort of making a point of publishing a chart or two a week on my LinkedIn feed, so you can go there. I think so. Those are two great places to look.
And the Real Estate Forum in April, you're moderating the Titans panel.
Yes. So I'm also with Andrew Tong from Concert Properties. The two of us are co-chairing the Vancouver Real Estate Forum, which is coming up, on April the 5th. And so what co-chairing involves doing a little bit of curating the content, but also we're emceeing the day. So there's a lot of great speakers, as well as, the housing minister. We've got the mayor of Vancouver, mayor of Surrey, great speakers on every asset class, as well as some of the debt and lending challenges that a lot of real estate industry professionals and companies are facing. And then, at the end of the day, we've got a great panel that, Michael Emery from Allied REIT, and now you're going to make me go through Eric Carlson from Anthem,
Right.
Colin Lynch from TD, and I believe Janice Lynn from from Blackstone. So we've got a really powerful panel of real estate leaders from across the country at the very end of the day, which I'm looking forward to getting to interview them and hear what their perspectives are on, Vancouver and Canada and real estate over the next few years.
Fantastic. Well, thanks again for coming down, Wendy. That was great.
Okay, thanks for having me.